There's many problems with trading Renko, and one of the biggest ones is always filtering out the false signals that Renko gives. And as I've stated before, that if you could work that out, you will be a very successful Renko trader. Now, there's many ways to do the filtering. Here is one concept: is using two Renko charts. On the right hand side is the chart that I've been testing. This is Renko set on percentage, stock standard, with the Lin Reg candles. I'm doing that just so it smooths it out even more for me. It's behaving more like traditional candles. Okay. On the left hand side, and that's a 1 minute chart of Renko. On the left hand side is a 10-minute chart of Renko, and these are stock standard Renko. You can see it here. So they're both set the same. I just don't have the Lin Red candle set on this one. Okay, I could, but just for this exercise, we're not. If you don't know anything about Renko, there's information obviously on the web. Just type in Renko Trading View and it will come up with some information here. I've just found just a couple of pages here on the web. Renko should be only, it's not time based, okay, it's price based, so it will only go up or down based on your settings. However, for some weird strange reason in TradingView, it's time based as well, because clearly we can see it here. I have a 1 minute, let me just go back to the start. I mucked that up, sorry. So here's a 1 minute chart of Renko, okay, and here's a 1 minute chart of Renko. Now there is a difference. Now I'll put that to a 2 hour, and you'll see the huge difference. Okay, so it's time based. And they even go on to admit it here that it's time based, and which is very strange because this literature has changed since maybe a good 12 months ago. So in a way it's a good thing, and in a way it's a bad thing, because we just want to see this thing go up in price. And that's why I say this is a 1 minute chart, because you can have a 2 hour chart. And so what actually happens is, on the 1 minute chart, each bar will be printed after 1 minute. Whatever the data is, if it's gone up, it'll print a bar after 1 minute. If it's gone down, it'll print a bar. If it hasn't gone up or down with your settings, nothing will happen. Okay, and these on this side here, I mean, look at that, beautiful way to trade, but each one of these bars will take 2 hours before it's printed. Okay, and what actually happens is Renko has projection bars, so of course price will be going up, and you'll see these projection bars rising for a long, that is, and they'll be like a light color. And it's just showing you, yes, the market is going up, but we're not going to print this information until 2 hours has passed. Okay, it's you need to go watch a couple of nights of trading just to see how it all works, and then you'll go, oh right, I understand. Get up a couple of charts and muck around. So let me just go back to this 10 minute chart. So this is now a 10 minute chart of Renko bars, right? Which is, each one of these bars will run 10 minutes, and if price has gone up, it'll print. But for instance, see this bar here. So this bar has been printed after 10 minutes. Now price might have gone up, right? This might be 10 minutes from, as an example, it might be 10 minutes from here to here, right? And price has gone up $1. This is crude oil, right? But a bar will not be printed, and you'll see this thing going up, right? This light green color, and it's showing you that yes, the price is going up. And then what will happen after 10 minutes? It won't print one bar; it'll print all of these bars, and then bang. So all of a sudden, you've now just got all these bars that it's printed after 10 minutes. So it's a scary way to trade. It really is. I always say Renko is one of the, I reckon it's the hardest way to make easy money. I always say that. Anyway, what I'm looking at here is just trying to filter out all the crap, see if we can, get away from some of these little whipsaws like we have here. Like we have maybe here on this chart, this little down bit. But it wasn't there, it was over here somewhere. Let me see, I've lost it now. Let me see if I can find it. Let me see if I can find it. This might be one here. On the right hand side I have a 9 EMA and a 20 EMA. This is undergoing testing as well, and I also have the CCI on both charts. So by going to a 10-minute chart, it does knock out more noise. So we can clearly see here, that the market was going down. Okay. Now on the right hand side, there's a way to filter out these little pullbacks. Is using the CCI. This is a CCI 20. Is do not go long. So we're short here. We're short all the way, and now this is pulling back. Okay. You can see how the CCI line pulled back into the channel. Do not go long until it breaks over this zero line. If it breaks over the zero line, then you can go long or assess that the market is going long. Okay, but I mean these indicators are pointing downwards. So like here you can see it turned around, and then obviously the CCI went above, and everything's working together. Okay, and it's the same here. You'd go short here because it's breaking through the EMAs, it's breaking through the CCI, and to me that's 100% sign that the market's going to go short. Well, we think it is, and then it turns around again. And then see here, see this little dip here, this little red bit. Look at the CCI. It came down, turned around. Would you go long? Not necessarily. It's a warning sign because it's gone back into the channel. Okay, I would probably go long if it went back out of the channel. Okay, but you need to be looking at everything. And then right here you can see that it tried to go long again and then came all the way down, and so that would have been your entry here, and then it's come back up, and you can see it's broken through the zero line. You could have taken that would have been a shitty scalp, but you could have done that, and you get the idea with what we're trying to do. So now we can also incorporate the left hand side 10-minute chart, and by looking at the CCI and see if they are both together. If they are both saying the same thing, like for instance, let me get rid of this. If so, here at the start of the market, you can see, you can see the Renko bars are going up, and you can also see on both charts that the CCI is going up. So okay, so they're in sync. Okay. And then obviously the market's coming down, and they're both in sync. Okay, you understand that. I don't really need to go through. And right here you can see there was a fake out, a pullback, and you can see both the CCIs stayed under. Okay, they're both going to behave the same, but at the same time they're going to be slightly different. Now there's something else that I've introduced on the 10-minute chart, and you can see the bricks are different coloured. I'll just turn it off. Okay, so that's the bricks, and now they're coloured. Okay, this thing here is called Elder Impulse. It's this here, and it's based on the MACD. Stock standard settings 12, 26 and 9. You can change these settings, and there's an EMA in this equation, and it's the 13. And if I put this on, and I'll just turn that off. So there's a 13 EMA on this chart. Okay, So what am I getting at here? And I'll just quickly go through this. That's it. That's all there is to it. Okay, I mean, I shouldn't say that's all there is to it. It's a little bit complicated to explain, but I'm going to try and do my best. I'm going to get up a MACD, and I love and hate the MACD. I think it's a great indicator, but at the same time, I struggle to use it. Where is the thing? MACD. Okay, so here's the MACD. The way this works is when price, in our case a brick, is above the 13 EMA, okay, and the MACD is also ticking, and when I say by ticking, it's the histogram bars are ticking upwards. So long as they continue to tick upwards, okay, the bars will go green. Now right here, for some reason, it went blue. So when it's green, it means you need to go and read Alexander Elder. I think it's Come Into My Trading Room. You need to go read his book on it all. And there might even be some YouTube videos. I've used this system with some success and with some failure, okay? But I'm reintroducing it for this video, and I'm going to retest it again. I've done this 1,000 times. I'm going to do it another 1,000 times. So when these bars are green, it means we can go long. Okay, it means you do not go short. Do not short. When they're green, do not short. When they're red, you go short, and you do not go long. When they're blue, it means indecision. It means something in the market has changed, okay? And it's up to you, whatever you want to do. So if you see this blue, you might think, okay, I'll get out, okay? However, based on these indicators, we're still long. So this might just be a very small pullback. And I don't know how big or small it is. This is the problem with Renko. You know, we might have had a rogue bar on the normal chart that's gone right up or right down. You know, we don't know. This is the problem with Renko. So that's an indecision bar. You do what you want to do, and then it goes green, re-enter the trade. So now you can see here, as we've come up to the top, where we've gone blue, and what that means is that something has changed with the MACD. So you can see here, it's a bit hard to see that. If I could get the numbers up, forget it. So whenever there's a change within the MACD, the histogram, or price has moved in, somehow in relationship to the 13 EMA, the bar will go blue. So right, it was green here, and this bar must have just ticked down just below this bar. We just can't quite see it. Might have just ticked down. If I actually put on, I just don't like using the colors. Let me just reset it. Yeah, there you go. So you can see green, and it changed color. Okay, so that means indecision. There's something changed in the market, and it's an alert that something might happen. Now you can see the next bar was red, however it was blue based on Elder Impulse. Okay, so it's saying you can do whatever you want. You can go long or short. As soon as you hit a red, it means you do not go long. You're allowed to go short. And of course the CCI and this MACD started to tell us that maybe the market's turning over. And if we look on the right hand side at that same point where the cursor is, you can see the market right in here went short. Okay, so it's a good way to filter things out. The timing's a little bit difficult to do, but I just wanted to show you that I've done this years ago with it all, and I'm reinvesting some time into it again on the weekend. It's a bit. These are printed results, so I can become a millionaire just by looking at printed results. Trading this live is very difficult. But yeah, anyway, so there's some concepts to use. By using this 10-minute chart, it might help you gauge your entries. You might be asking, can I put this elder impulse onto this right-hand side? No, you can't, because of the linear red candles. For some reason, it won't take it. Yeah, so if I don't want to do that. Yeah, so so we're trying to filter out some of the noise, and so this is another way of filtering out stuff by using this larger time frame Renko of a 10-minute chart. You could use a 5-minute chart if you wanted to. You could use a 30. You could use whatever. Just go a 30-minute. See what happens. And that's going to now filter out all these little. So have a look here. This is the 30-minute chart of Renko. 3 bars were produced, but in here there was a whopping big short. You might have gone short there for 30 cents, you know, whereas that would have been 30 cents anyway. No, it's 12 cents. So, and this is crude oil. So, and it didn't break. Oh, it didn't break through the Renko. Sorry, it didn't break through that 13 EMA. Oh, that might be the end of this vid. This happens. I'm in Vietnam, and some of the data just completely just disappears on me. I don't know what's going on there. Let me just try this. Oh, we're back. Good. Yeah, we're back. So you can see here, this is Friday of oil. You can see it was a beautiful long, if you caught that, and then it just went into this consolidation, but it was just moving up. It was moving up, and so it was really whipsawing, and a little bit hard to know which direction. That's why I've got these EMAs in here. But if you have a look at the 30-minute Renko, it was always long. Although, excuse me, have a look at the elder impulse. It's gone green, and then halfway through, it changed. Okay, so it was green here, but the elder impulse said, okay, there's something wrong, and it's the MACD. It's just the MACD saying, okay, the distance between the blue and the orange line's getting shorter. That's all it is. So you just need to. It's not the end of the world, but you just need to just be following closely and always just keeping, your stops relatively close. But if you were taking trades on this right-hand side, right, and you're going, I just don't know which way the market's going. Well, this 30-minute now is telling you it's long. Why? Because price is above this 13 EMA, and the bars have not gone red based on elder impulse. Okay, so you go, okay, well, there's a pullback, 2 red bars, and then it goes long again. It's not a 100% solid concrete way to trade, but it's just another concept that I'm throwing out there. Everything I do on this channel is all about ideas and concepts, and I just like to share my findings because it might stir some interest in you, and you might go, oh yeah, you know what, I reckon I can improve on that. Yeah, so interesting stuff, isn't it? It really is. So this 30-minute chart, each bar, it won't print until 30 minutes of time have gone past. It's annoying. It's so friggin' annoying. But it is the way it is. All right. Back to the drawing board. Catch you later.